Yeah, we're live. Oh yeah. So this is another session of AVOI by Lamar. Um, I'm going to teach you why you don't need 5 trades in a day. There's a lot of people that you might see take 10, 12, 8, 5 trades a day, and it's honestly not needed if you simply just compound where price tells you where to go. Me, this one day I brought in 3.5%. Let me show you really quick. Here, 3.6. And you see this. Yes, it's the paper trading account, but it is live action. It's the exact same tools that you need to be real. And that was just based off of 1, 2 compound move, exit off the highs. Now I'm gonna break this down why I got in at this area. Let's go to the forward and make it a little more clean. Let me space this out. Right. Let me make this full screen for you. You don't need all this information, honestly. Let me clean this up. Here. Understand, once price clears a low or clears a high, there's always distribution. People might see that as a retracement. But I really want you to understand there's a difference between retracement and reversal. This is a retracement that leads into a reversal. This is an opposite of this move, but a continuation of this move. Alright, this is not what this video is about. Alright, cool. This video is really about why this move here is all you really need. Now I'm going to break down the 1, 2, 3 candle. It's not a pattern. It's just information that's vital to why you should buy, why you should sell. Understand that day number 3 should always touch day number 1. That's why everyone loves getting in on a Wednesday or Thursday and getting off on a Friday, because you get the most information on a Monday and Tuesday. And that's all you really need. So let's just say this is the daily chart. I know it's not. This is the 4-hour chart, so each candle is 4 hours. I'm not stupid. But understand the third day always touches the first day for a continuation. Let's just say this is day 1, Monday. Tuesday was a continuation of Monday. Wednesday should be touching Monday for continuation. So there's always a buying opportunity on the third day. That's what this was. That's exactly what this was. On Wednesday or Thursday should be a continuation of Monday unless price tells you opposite. And if it tells you opposite, if it's not clean, then you don't have a trade. But understand, price should always be balanced. Price loves to be balanced. That's why the fair value gap is so important. Because once you have an imbalanced price, you know where price is more drawn to. But if not, you just continue the same direction that price is already going. So go look at the daily chart. Grab any 3 candles and watch how the third or fourth day touches the first day for a continuation. Small rant. But as soon as you broke these lows, distribution, we broke highs here. I always go back at least 2 to 3 days on the 15 or 5-minute chart. That's exactly what this is. As soon as we broke, what day is this? The 23rd. That was a Tuesday. So Tuesday broke Monday's low. All right, we're continuing on the downside. I mean, obviously there's like a giant fair value gap here. So we know we're going to continue. So we broke Tuesday's low, but as soon as we broke Tuesday's low, we had a dramatic spike in price. Once price runs away from liquidity area, there's a higher chance of a continuation option for you to get in. Let's go down to the 15-minute. I can show you a little bit better. Oh, these are still lit. Well, you see where I got in at. Right here. I appreciate you. My wife is saging the house. It's beautiful. So imagine this as a three-day candle. Day 1, day 2, day 3. Day 1 created the high and the low. Day 2 broke the low but told us it wanted to go higher. It grabbed everyone's sales loss. No, I don't want to say that. Let me rephrase that. It told everyone that this is resistance. You might understand that a little bit better. It told everyone this is resistance up here. Spectacular. Thank you. Because now I know where price is going to grab everyone's sell loss at. Once it ran up here really, really fast, I automatically knew that we're going to have to come back down somewhere. But where? Where do I like to get in? I like to get in on an imbalanced price that broke a high or a low. See this little blue mark here? It's a blue line. Broke highs with this candle here. Broke highs with this candle here. And closed. That is all that I look for. Imbalanced price that broke structure. Price has to come back and rebalance. Well, what about this price here? I understand it broke this. This is the open. This is the open of the day. For the people who bought the open of the day, they should have got out. They didn't. Don't ask me why. They just didn't. So price said, thank you. You thought you was buying a new STO today. You thought you was buying a Ducati today. Thank you. Price ran back. Remember how there's a pool up here? Price ran through that pool. You see how there's a pool up here? Yeah, that's exactly what caught my eye. As soon as I saw that price took out everyone who got in on the open of today, ran up to the exact same area and didn't fly by, that's just telling me it's creating a pool of people that is thinking they're buying Ducatis. Like, that's what I think about. How many motorcycles can I buy in a day? Make this fun for yourself. Fun but discipline. But as soon as I saw that it took liquidity from everyone who's bought the open of the day and left this as in coming back down, oh, thank you. Thank you very much. Because I know for a fact that there's no one in here anymore. At all. And what made me get so excited about these marks right here? If you ever see, let's just say you are doing the ICT 22, what is that? IC 22 model. And you remember last year's model, the order block model? Spectacular. Now I'm going to combine those two, right? Combine those two with amazing precision. I'm just going to show you. Here's your order block. Here. Actually, no, let's go to the 5-minute. I believe it looks better on a 5-minute. Yeah, it does. Here to here. That's your order block. These gray candles consecutively here. Why this order block? For one, all of this is imbalanced. I just want to point all of that out first off. Price ran, came here. I got in here off this impulse. Personally, I felt like I got in too early. Yes, it was at the it was inside the fair value gap. I felt as though I was still in too early. I got in an amazing time, just a little too early. And if you don't think this is significant enough, you can also look at OTE, if you remember that as well. He combined that with the order block. This is also perfect. Yes, I got in early. I understand that. But this is also perfect. You have the middle of an order block. You have OTE, right? And it's also a discounted market, telling me that it just created a liquidity pool above. What else do you really need? It took everyone else out here. It told everyone this is resistance. Told everybody, hey, trust me, I promise, I won't budge at all. Flew back down for everyone who got in here. You should have got out. And Price loves doing this. I don't know if everyone really acknowledged, but what's his name on Twitter? TT Trades? Marvelous guy. Price loves doing one of these. Hold on, let me redo that for you, make it a little more clean. Here. Price always loves telling you, this is it. This move right here takes everyone's sell loss, because everyone's gonna put the sell loss right underneath this low. If not, right underneath this low. Price does it all the time. All the time. My sell loss was in this area, underneath the fair value gaps candle. The first number one candle of the fair value gap. It's always underneath there. But Price loves doing the thank you. I call it the thank you grab. And then it breaks the high. And then you can get in to capture the real move. And that was my trade. Distribution was first, knowing it's going to go the opposite way now because it took liquidity, right? It broke highs with the imbalanced candle. That was this blue mark. It took liquidity from the open price. Thank you. It created a liquidity pool. Thank you. Came back to a fair value gap that broke internal highs. Thank you. And that's it. I got out at these highs. You see the red mark? That red arrow? I got out exactly at the highs of the day. And I'm telling you, you don't have to reach for nothing crazy. You just reach for where price is already gone. And let's just say I reached for 42.01. My take profit wouldn't have been hit. Because this high is 42.013. And let's just say I put it exactly at 42.016. It wouldn't hit. Maybe it would have. Maybe I'm going crazy. But it is crazy. But that's what it takes to have an amazing trade. And this was only 2 trades a day. Actually, I just compounded on 1. There was no 5 trades. There was no 6, 12 trades. It's 1 trade, 1 idea, 1 direction. And the price sings. High note. All the way. And that was another session of AVOI. Come back for another session, because I'll be honest, B&B is looking pretty nice. That's all I'm saying. B&B is looking pretty nice. That's all I'm saying. Let's go to the 4 hours so I can show you why. It looks very, very similar. Looks very, very similar. Look at this. I'm just saying, it has a pool down here for a reason. Enjoy your time. Have an amazing week. Stay safe.